Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This technical analysis video for Monday, January 30th through Friday, February 3rd, 2012 is sponsored by RealTick. Alright, let's get right into the mix, folks. The market's putting in a pivot top last week at the exact level that we called for inside the research center, inside the intraday stock chat at InTheMoneyStocks.com. And first things first, you want to try us out? 7-day free trial. Very simple, no obligation. You cancel before it expires, you are not charged. That's simple, folks. Alright, and that's a 7-day free trial to any of our services here, the intraday stock chat or the research center. Research center is geared more towards swing traders and investors. Now let's just show you where this level came from. Obviously, you had a beautiful little gap fill here on the charts on the daily SPY. Remember, the S&P 500 is basically tracked by the SPY, which is the ETF for the S&P 500. All right, so again, this little gap right here, perfect level from June, make that July 26th. So July 26th is that gap fill. We filled it on Thursday. At the same time, this is what makes this level even more conducive to a pullback, is the fact that if you zoom out on the charts and you go back to 2007, we're talking about the height of the real estate bubble. We're talking about when everything was just amazing in this economy here in the U.S. That was the pivot high of the markets. All right? If you take that high connected to the pivot high from 2011 and draw a line straight through, you get the exact high right here that was tagged last Thursday. So again, do you see how putting those two pieces of the puzzle together make you very successful in terms of finding a top in the market where to go short? And that's exactly what we did here at InTheMoneyStocks.com. We saw that level, we gave it to our premium members, Research Center, Intraday Stock Chat members, and ultimately shorted the market. And all of a sudden, while everyone else that's been shorting the previous 3-4 weeks over the course of this move up, they're out of the money, we nailed the exact top. That's simple. Okay. So that pivot top's in play. The market on Friday, after pulling back beautifully on Thursday, had a flattish day. Dow, S&P were down. NASDAQ was up. Tech stocks, again, still very, very strong right now. But again, this is the intraday chart. Here's your pivot high at the 133.30 level right there. This is on an intraday 10-minute basis. The reversal, and then Friday early in the day when we had volume in the markets, continued their way down. And then once volume died out and all the traders, the real traders, the Wall Street players, institutional players left for the day, obviously half days on Friday, the market was able to float back up and kind of close flat. But again, the key is you have to recognize the market tendencies right now. And this is very important. All right, we've had so much good news and the markets came off the highs. All right, remember, last week, Tuesday, Wednesday, Apple earnings, Federal Reserve, very, very bullish on both fronts, and the markets ultimately topped. Okay? So that's telling you that the good news out there is already baked in the cake. There's nothing much else to report. I mean, Apple was the height of earnings. The Federal Reserve is done. We get jobs data on Friday, but everyone's going to expect a very good number anyways. So what's the next catalyst for this market? Europe seems okay, so that can't be a catalyst. And that's the key. You have to read that and say, all right, if all the good news last week couldn't drive this market up Thursday and Friday, then what really is left? In addition, the dollar is always a possible catalyst, right? When the dollar goes down, the market generally goes up. That's the way it's been for years. But notice on Friday how the UUP went lower throughout the day. I mean, we had a big down day on the dollar. UUP is the tracking ETF for the dollar, by the way. So the dollar sells off all day long, and what does the market do? Does the market go much higher? No. Market barely closes flat, down 6 cents on the spiders. And again, even with a falling dollar, the market still wasn't able to get a bid. So, I mean, if you put two and two together here, and it shouldn't take a genius to do this, you can easily see that the markets are in a position there where, again, the good news catalyst is really not causing the market to go up. The dollar's not causing the market to go up when it falls. And the dollar eventually, believe it or not, if we go back to the dollar daily chart, looks like it's due for a bounce. If that's the case, then this market is definitely going to look to see some more selling this coming week. And that's the prognosis, folks. Bottom line, this is the UUP chart. Beautiful topping tail. We saw this topping tail, alerted our subscribers to it. Dollar fell, and look at this pivot support right here. Pivot low. There should be some support here. If the dollar goes a little bit lower, it's going to go right into this area here. But either way, you're very near support. 200 moving average will be next. I would expect a little bit of a bounce in the dollar this week on more worries out of Europe. Things have looked very good in Europe, or at least have been quiet. I wouldn't say looked good, but have just been quiet, so the market's been liking that. Look for something in Europe to bubble up this week to scare the markets. I'm not looking for a big sell-off. I want to make that clear. You're looking for a small pullback 3% give or take from the highs, which were 133, 3 to 5%, I would say. So from 133.30, the pivot high that we called, 3 to 5% pullback before maybe another push up. And again, that'll be a compilation of a dollar bounce, euro pulling back, issues in Europe, and possibly the jobs data on Friday not being that great. Okay? So I hope everyone understands that. What I want to do now, after giving you prognosis of this market going forward into this coming week, I want to just go over a couple key charts. Let's first start out with JP Morgan. Now, JP Morgan does look extended on the charts, but you wouldn't short it. Why? Because you have bullish consolidation and you're above the 200 with the 20 sloping up. Way too much support to try to short this. There's way better charts on ugly companies out there that are shortable. JP Morgan is not one of them. Yes, it could pull back, but the odds don't favor the likelihood up to the point where you would take the risk. Meaning that maybe it's a 60-40 pullback scenario. 60 chance of a pullback, only 40% not. That's not good enough. If you're trading those odds, you're a losing trader out there. I'm just going to be flat out open and honest with you guys. All right, I know 60-40 seems all right. That's casino odds to me. I want the 90% success rate trade, and JP Morgan is not one of them. How about Apple Computer? Up 265. Would you short Apple with a possible pullback here? Yeah, I mean, Apple ultimately should come back in here when the market does continue to pull back. Would you short this? No, you wouldn't. Why? Because, again, you're taking the strongest stock with the best earnings of earnings season, and you're trying to short it. Why would you do such an idiotic thing? All right, instead, find a company that hasn't done as well, that's extended ridiculously, and then do that. There are so many out there. And again, we've played some ETFs here on the short side, folks, going into, obviously, last week's pivot point. We nailed the perfect top right there. Just as the market was hitting, I was shorting stocks and shorting ETFs and just positioning myself for the downside. That's what you have to do. And you want to find the plays that are going to work for you. QID, short the Qs, obviously, beautifully. SDS, short the S&P 500, SPY. I mean, those are great market players as well to play for the downside. Okay? Now, again, you need to see volume continue to pick up here. It picked up a little bit last week as we topped out. You need to see good volume this coming week. That will help the downside as well. If we go into light volume mode, they could float this market sideways for a few days. But again, we should get a little pop in volume. I have no doubts there. Exxon Mobil, guys, beautiful little pullback Thursday and Friday on Exxon right off this triple top. Look at this triple top right here. Pivot high, pivot high, pivot high, and then a pullback. The chart is very extended on this. Something to watch for possibly more downside, although you are on the 20 moving average, so let's watch on Monday to see if it breaks through that level. Baidu, B-I-D-U, I believe they report earnings on Monday after the close. Baidu, again, very nice day on Friday, up $7 and $7.46. Would I be buying this? No. Would I be shorting it? No. All right, a little bit of a bearish pattern here below the 200, but again, you're above the 20 and the 50. There's mixed reviews here, positives and negatives, therefore you leave it as a neutral. One stock that looks like it may have put in a top was Caterpillar. Beautiful little pivot high right here, folks. You take your trend line, draw it right across. Nice little tail reversal off of earnings. Earnings have passed. Stock is ridiculously extended from a level down here at around 67 and change, all the way to a pivot high here at around 113. I mean, that's an amazing move from October to now. I mean, that's a huge percentage move, folks. Again, just to repeat, you're talking about a move from $67.50 all the way up to a high on Thursday at 114. Crazy, crazy, crazy. A pullback, my guess, would yield the 20 moving average. First hit of the 20 probably gives it a bounce, but that's a possibility. Deere's a sympathy play off of that. Stock, again, ridiculously extended. Doesn't quite look as extended as the Caterpillar chart, but nonetheless, very good play as well. I also think it's kind of interesting here. You definitely can see you're kind of into this pivot high with this pivot high comes in this general vicinity as well. Could be a pullback candidate on DE. All right, let's take a look at U.S. Steel. U.S. Steel had a nice little pop early in the week, but pulled back a little bit. You can see kind of been going sideways to up. Not loving this chart. Could go to this level, could pull back. Really a 50-50 chart there. All right, let's take a look at a couple other stocks out there. How's Research in Motion doing? Research in Motion had a nice pullback once that new CEO took over. Since then, it's actually popped back up. And the stock does continue to seem to be trading in this mid-teens level on speculation of, who knows who's going to bid for the company at some point. I would only be a buyer of this if it came into a double bottom or somewhere in that vicinity. Then I'd probably take a shot at it. All right, and that could happen if the market pulls back. I mean, you could see it pull back with the market most likely. All right, looking at a couple other charts out there, how's MasterCard doing? MasterCard, one of my famous shorts that I made a lot of money on when everyone else was so bullish on it, when it was trading north of $380. Made some great money on that pattern there. And then ultimately, you can see it's put in a nice little bottom pattern here. Consolidating. We'll see again if it gets a pop this week or a pullback. Support levels would be 200 moving average, obviously. And I would say resistance. The moving averages, obviously. And then you'd have gap fill right here, which would be something of interest as well. And pivot high. Okay? So just some keys to watch there on the charts on MasterCard. Let me scan through my watch list, see if there's anything else I want to bring to your attention today. We talked about JPM. We talked about Exxon. Let's take a look at Google. Google's an interesting one to take a look at. Google, obviously, the earnings were not great. The stock, though, beautifully came down to the 200 moving average and then got a nice bounce. I wouldn't be surprised to see a little bit more of a kind of pause-ish type sideways choppy activity, maybe a little upside on Google as some shorts cover. But I do think Google's going to go lower, guys. All right, Google needs to, in the very least, fill this gap, which it didn't fill yet. So I think it's going to come back down into this range, maybe over the next 2 to 3 weeks. And then that'll be an interesting level to watch. If it gets through this level, then you're talking about a move all the way down here. This would be a general vicinity level to watch on the charts as well. All right, guys, I've gone over some analysis. This is just a taste. It's a tidbit of what we do in the Research Center or in the intraday stock chat here at InTheMoneyStocks.com. There's a 7-day free trial. I repeat, 7 days free. All right, you don't want to continue with us at the end of the 7 days. You just simply cancel, and you're not charged. Very, very simple. Come with us. Members made so much money. Just let me give you a sense of this. We play the ETFs on the market. We play the stocks, the large caps. We also play small caps. One of the stocks that ran for members on Friday, DHT. I gave this one out beautifully in the money now, up over 10.5 cents to 87 cents on Friday. Just a beautiful breakup. This should continue to move higher. In addition, a stock I gave out, ANX, which is a biopharmaceutical play. Look at this pattern. I mean, this was just a no-brainer. Look at how it got above the 2 moving averages on Thursday. This was telling me it was going to run, and then the blast off up almost 7 cents to 69 cents, and just starting its breakout. These charts are a beautiful thing, and they're rocking it for members. Small caps have kicked butt for members all year long in 2012. One, just to show you, I gave out a stock called HIMX right here. Look at this level. I gave it out at $1.01. Look at, since I gave it out on this specific day, it went north almost non-stop all the way to $1.50. Then it pulled back. Now it's making its way back towards the 200. These are just a sampling of plays you get inside the Research Center. I have more coming this week. Join now, take the 7-day free trial, start profiting with the pros. I mean, there's no reason you shouldn't be making money left and right. No matter if it's an up market or down market, there are always plays, and we're going to bring it to you. So again, take care. Have a great rest of the weekend. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial.